You're watching Wall Street Confidential, retouching something that was mentioned on Mad Money last night with Jim Cramer during your lightning round regarding Under Armour. Some people are confused about your call on that.
Under Armour is an inventory issue. If you go back to the conference call, they said that we have a 100% increase in our inventory in the channel. That is a huge red flag because when you have that much inventory, you have to cut price to move it. The bet that they made was that there would be cold weather throughout the country in October and November. We didn't get it. So until I see that inventory cleared in the pipeline, which will only come from cold weather, I am reluctant to make a stand on Under Armour. Is Under Armour a great brand? Absolutely. Is it a well-run company? Definitely. But anybody that needs cold weather didn't get it. So if we are talking about a coat maker, a Burlington Coat Factory, Fifth Republic, I would have to say stay away. I mean, Under Armour, if we had gotten cold weather, would be at 100. I'm telling you, it'd be at 100. It would double. Now, because we don't have it, it's difficult to try to figure out in the channel where the stuff is. If we caught 4 weeks of cold weather, the stock will be up 20%. But it's a weather play. It's a weather play because they have so much inventory. It's not a play on their brand right now, which is excellent. It's not a play on their marketing, which is brilliant. It's just a play on weather. So
if you are that long-term investor in Under Armour, it's still a solid investment. This is a seasonal point you're making, right?
You know, what will happen is if they miss a quarter badly, you'll have a lot of money coming out of it. So I'm reluctant to say people buy long-term because they feel that there's consistent growth. We will have inconsistent growth if they miss the quarter, so it may not be good long-term. I think that we thrive on companies on Wall Street that are brilliant, and it wasn't brilliant to go to 100% inventory. Now, last year they told you they ran out, so this year they weren't going to run out. I have historically felt that if the pipeline is filled and the inventory is too high, you can't own the stock. And frankly, I now have to say that they made a bet. And I don't like my great companies making bets. Hansen made a bet that didn't work. They had an inconsistent month. The stock hasn't recovered. Crocs made a bet that didn't work. So the notion of long-term with a fashion play, Lululemon, and the wrong, they had the wrong product. The seaweed product that turned out to be not seaweed. These are trades. They can't be. Nike is an investment. These are trades.
All right. The difference between a trade and an investment. Thank you so much, Jim Cramer, Wall Street Confidential on TheStreet.com TV.